Start, ma'am.
Sorry, your voice is breaking, sir.
Please start the class.
Okay, sir. Good afternoon, everyone. Today we are going to start your accounting journey. So, am I audible?
Yes, ma'am.
Okay, sir. Thank you. Let's start our journey. We will start some basic accounting concept. So, throughout this course, we will able to understand some basic key concepts like assets, liability, income, expenditure. So please, if you have any query, don't hesitate to ask me any question. Okay, please, and please share your thought if you have any question. We have limited time, so we will try to cover the code within the course within the given time. So this is the first chapter. This is the basic first paper of CAD, that is fundamental of financial accounting. So let's have a look towards the key concept we have to cover. First is depreciation. Okay. Then we have to cover preparation of financial statement. Then cash flow and ratio analysis. So we will start with depreciation accounting. Depreciation. What is the meaning of depreciation? It is just a decrease in the value of fixed asset, a asset which is used in the business for production purpose, not for sale. A long-term asset. It gives us some benefit. Am I Is it okay, sir? So we will share first the book. Okay. So we will start with depreciation. Depreciation is a gradual decrease in the value of fixed asset. It is the process of allocating value of asset over a period of time. Each fixed asset has its residual value at the end of accounting period. So, purpose of depreciation is to write off the amount over a period of time. So, it is kind of written off. Okay. So let's have a look towards the definition. Depreciation accounting is system of accounting which aim to distribute the cost of the basic value of tangible assets. Okay. Let's salvage value. That is salvage value, it's a scrap value, which may be zero, negligible, or maybe value which don't it may be negligible over its useful life. Let's take an example. For example, a company, name ABC Limited, has purchased a machinery for rupees 1 lakh, okay, having its useful life 8 years with a scrap value 20,000. So we will calculate depreciation as cost minus residual value upon divided by the its estimated life. This is the amount of depreciation. Now, application of depreciation, we will make it understood by the way of PPT. Wait, give me a sec only. Next. Depreciation. Its meaning is just a reduction in the book value of fixed asset. Okay, it may be caused due to wear and tear. Wear and tear may be a it's normal. You can say like wear and tear. It may be become obsolescence due to regular use, outdated technology, or advancement of technology. You can say. So its treatment. We will discuss how it's applicable in accounting. So it is just allocation of depreciation is the allocation of its value over a period of time. It will listed it. We will show it as an expense because it is expense. So we will show it as an expense in income expense. In balance sheet, it will reduce from the value of fixed asset. Wait a little bit. Wait, let me share the book first. Just a bit. If you have any query, you can ask me, please. Now we will start some key terms that has been given. Now we will use some or definitions. Amortization. What is amortization? That is, amortization is related to intangible assets. It may be goodwill, copyright, patent. Amortization word is just similar to depreciation. We will write off their cost, but in different way. Like same method, we will allocate it over its useful life, but not for tangible. It is used for intangible assets. Like for this, there are 2 points you should note. Only straight line method can be applied for amortization. Second, it can be used for intangible assets having limited useful life, but it will not applicable for the assets having unlimited life. Okay, amortization. Wait a minute. So amortization is the term just similar to the depreciation, but the difference is only that depreciation is applicable for fixed asset, but amortization is applicable only for the tangible assets. Intangible asset means assets that don't have any physical existence. They just write off in the book of account. Now we will show their treatment, how to apply them in the accounting. My presentation about amortization. So we will apply this is it will shown as expense in the income statement. In balance sheet, it will deduct from the intangible assets. Suppose we have our intangible asset maybe value rupees 1,80,000 NA. So accumulate expenses we will deduct from it and we will show it as net intangible assets. And in P&L account, entry will be like this: amortization expense and accumulated expense. This is it will be calculated by the same way. Cost of the assets minus residual value divided by its minus scrap value divided by its estimated useful life. That is amortization. So the basic difference between depreciation and amortization is that depreciation is applicable only for the fixed assets, but amortization is applicable only for intangible assets. Now next, let's toward the next key term. Where is let me share the book first. We will try to cover all the topics with the time. Please ask if any query you have. Now, depletion. This method is used for the natural resources. It may be forest, oil, mine, each like this. For this, we use depletion method. It is the same method of allocating the depreciation, method of allocating cost of assets over its useful life. The only difference is that the appreciation for fixed asset, amortization for intangible, and it is for the natural resources. The same pattern is followed. Take the cost of asset minus its scrap value and divided by the estimated number of life. Now we will read some from the book. This method is specifically suited to the mines, wells, quarries. Same, I've told you that forest, mine, oil, gases, all such things, we can use depletion. The cost of assets is divided by the total work of the mine and etc. and by following the above manner rate of depreciation. So this is the same. We can calculate the depreciation by the same method. Method is applicable for all the three terms. It's same, whether it is amortization, depreciation, depletion, or obsolescence. Method will remain same, but applicability is different. Amortization, intangible, it is for natural resources. Now, obsolescence. What is obsolescence? Sometimes we use some fixed asset, like any asset, plant, machinery, we have just purchased, but due to advancement of technology or physical existence or any other thing, it becomes obsolete. Matlab we can't use it now for long. Advancement of technology, demands of customer, or so many things, so many reasons there may be. So we have to replace the asset, whether we have fund or not, but we have to replace it. So this is obsolescence. Wastage of machine, whether its time is not expired, but we have to replace it because of advancement of technique that is obsolete. So formula will remain same. It will be same like cost of intangible assets, cost of the asset that is replaced minus its scrap value at that time divided by number of its useful life we have used it in the business. So let's take a look towards the term that is written in the book, obsolescence. Obsolescence is the refer to loss of usefulness arising from the such factor. Technology changes, technology changes like improvement in the production method. Now technology are improving, so all such things are required. That's it. All these three terms I have explained you. If you have any query, you can please ask me. Free to ask. Okay, and please share your thoughts. You have any query now? Let's proceed to the next topic. This is the nature of depreciation. Okay, nature of depreciation is considered by two methods. That is IAS 16. Now IAS 4 is not applicable. It is replaced by IAS 16. That is Indian Accounting Standard. And AICPA. AICPA is American Institute of Certified Public Accountants. What is IAS? No. Here is written IAS 4. No. Now it is replaced. It is replaced by IAS 16. Okay. So let's start its applicability. Nature of depreciation. Here is written something same. Depreciation is the term applicable in case of plant building. We have already learned now that depreciation in case of plant building, all the machines that are used in business for production purpose or long-term use that give us benefit. Okay, not for the purpose. So these we know that these long-term assets have a limited useful life, provide service to the entity. That's it. All the things are same. Normal wear, tear, obsolescence. All the things are same. But in IS 8, wait a little bit. IS 16. IS 16 emphasizes some important technical terms. Please note that. This is the key points about IS 16, not IS 4. It is depreciable amount that we have already calculated. That is cost of asset minus its useful life or scrap value, sorry, depreciable cost of assets minus its scrap value divided by its estimated useful life. Actually, depreciation amount is the cost of asset. It is what is the depreciable amount? It is cost of the asset that we have to write off in the balance sheet and showing as net assets. Now, what is useful life? Useful life is the life over which we are expected to use the assets for a period. Okay, or the number of units that we are expected to produce during that time. Now, depreciable method, there are basically two methods we are applicable. We have so many methods to compute depreciation. It may be annuity, sinking fund, revolution, WDV, that is written down value method, straight line method. One by one, we will discuss all the method, okay, and we'll do the illustration based on that, okay. Now, there are some key terms. Please note about it. IS 16 refers some important key terms. I want to explain them. What is depreciation method? applicable for IS 16 for charging depreciation. That is straight line method. What we call straight line method, unit of production method. Straight line method and unit of production, two methods are applicable in IS 16. Now, residual value, we have already done that. We are expected to get at the end when we are going to sell the asset. That is the residual value or scrap value. When the assets, we don't have any expectation for the from the asset, we are going to sell it. Though we get the amount that we get, that is the scrap value, which is almost negligible. Now, depreciation recognition. Depreciation is recognized as a profit or loss. Wait a little. So main concept in IS 16, which emphasize that we have to match the cost with the revenue generated. So why we write off the depreciation amount? Why we it is not a actual cash loss. It is not a cash loss. Just to match the expense with the revenue. So that's why we write off depreciation. Now next is AICPA. I have told you, American Institute of Certified Public Accountant. As per their concept, what is depreciation? There are some concepts. Give me a second. For them, depreciation is an expense. It is expense which is charged or allocated over a period of time. It is has the same treatment. It is shown as an expense in income statement. It is charged to P&L account and same as charge in balance sheet. Deduct from the value of fixed assets. So this is the nature of depreciation, which is based on two concepts. First is IS 16 and second is AICPA. Both I have explained. Okay. So let's take a look toward what we have done till now. Depreciation, their key terms and nature. Depreciation is just allocation of the cost of assets over a period of time. This is the basic definition. Just learn. If you learn it, then you will able to clear all the concepts like amortization, depletion, obsolescence. Now, you are able to even differentiate between amortization, depletion, obsolescence, and depreciation. And nature of depreciation is based on basically IS 16 and AICP. Now, causes of depreciation, we have two types of causes of depreciation. One is internal and external. Internal wear and tear, breakage. You can say breakage. Wait, let me scroll the first. Scroll. Scroll. Wear and tear. Wear and tear, we have just depletion, we have just learned about it. Wasting acid decrease with the weight. Wear and tear means just a reduction in the value of assets. It may be wear and tear may be for the assets, plant and machinery, furniture, motor vehicle, or any other machinery. We have given only 10 examples. We have lots of examples that we have learned in account. We have used in the business. So many. Depletion we have just learned. Now external causes. Obsolescence we have just done. Let's take a reads. Okay, innovation of better substitute. When asset get out of use because of many advancement of technology or any other reason you can say. Just try to understand the concept only. Now inadequacy. Change in the scale of production. Okay. First, let's take an example. For example, ABC Limited in a year 2008 it produces only suppose 2000 units of any maybe raw material whatever. Now its volume of production increases, it increases from 2000 to 20,000. So machine is not able to do so, we have to replace the machinery. That is called inadequacy. Now our machine is not applicable for such production, so we have to replace it. Now time element, as the time passes, the technology becomes obsolescent. It has no use. New advanced technology developed, so we have no other any other option. We have to replace the assets. So as the time passes, many technology has changes. You can see many examples in front of you. With the passage of time, some intangible fixed assets like lease, patent, copyright, all these intangibles lose their value fixed whether used or not. The word amortization is better to speak the gradual fall in the value. Okay, it is just decrease in the. It is the term used for the amortization, and amortization is that is used for intangible assets. Now, abnormal occurrence, you can understand with the abnormal occurrence, that is abnormality. It may be some tragedy, maybe occur, an accident, fire, anything can happen. A tragedy can happen with anyone. So this is the abnormal occurrence. Fire, natural calamity can damage the services, potential of the asset, partially or fully. Okay. Can damage the equity. Abnormal occurrence. Abnormal occurrence, there are maybe reasons, but they are abnormal. We don't have control over these. They are natural because of their like fire or many other reasons. So this is the abnormal occurrence. Okay. So we have learned internal and external causes or economic causes. Internal that we have to do it. We don't have any other option. Now let's have a so, next next topic. So characteristic of depreciation. It is charge against profit. Obviously, it is an expense. It is not our income, or it has no physical existence. We just write off it for the purpose so that by this accumulated amount we can purchase a new asset. So it is charge against. Obviously, it is charge against profit. Now it indicates demolition in the service potential. Okay, obviously, what it means, I've told you in the starting, it is decrease in the value of assets. It is the essential estimated loss of the value of asset. It is not actual. Okay. Whenever we purchase machinery, we can't actually estimate whether it will it work for 10 year or 20 years. We can just take a estimate that it will work for 10 or maybe 15, whatever. So it is not actual loss, but we write off it in the balance sheet and shown in the income statement. As we say, it is charged against profit. It is a kind of outflow. It depends upon different assumptions like effective life, residual value. Obviously, whenever we purchase the machine, suppose the company purchase a machine for 10 lakh or maybe 15 lakh, after we can say, now how can we actually estimate about what will happen after 15 years? But we can just take a estimate that it will work only for 10 hours, 10 years, 15 years. Then we will sell it at the value maybe 10,000, 20,000. It is just an estimate. No one can no one can actually accurately tell their value. It is the process of allocation and not of valuation. I know valuation that we allocate the expense. Okay, allocate means distributed it or spread the cost of expense over a many years. For example, asset we have purchased a asset. It worked for 10 years. We have estimated that it will work for us 10 years. So the cost of depreciation will be spread for 10 years. 1 year, year by year, we will charge it. Now, not for valuation. We don't just value. It is only estimation and allocation. It arises mainly from the internal causes, wear and tear, depletion, but it is treated as any expense charge against profit. Like, okay, we have just it is charge against profit. Now, depreciation. on any particular asset is restricted to working life of asset. Okay. Depreciation is uh, charged against profit only the time period till when the asset is in working condition. After that, we can't charge depreciation. We have estimated 8 years. It's working like so. We will depreciate the asset by 8 years, by 10 years, whatever the time period is given. Charge on tangible fixed asset is not charged on current assets. Okay, we know it is fixed asset. Current assets are not used for the sale, are not used for production, so we don't use it. It is charged for the tangible asset like fixed asset, plant, machinery, building, whatever. For allocating the cost of intangible assets like goodwill, periodic revenue, fixed assets, certain amount of their cost may be charged again periodic revenue. Okay. Suppose we have a patent, intangible assets, we have patent. It's cost rupees 1 lakh and negligible, no residual value. But its useful life is 5 years. Okay, let's start again. We have a intangible asset goodwill having value having value 1 lakh and estimated life 5 years. So amount is 20,000. We have to write off for 5 years. So we can charge against the periodic revenue. We will deduct it from the revenue. This is known as amortization. Just as we have already discussed, amortization is only for tangible assets. Now, object of and necessity for providing. Why do we provide depreciation? Wait, wait a minute. I need a break. 4 minutes. Give me a water, please. To match the expenses with the revenue, first of all. Let's say correct calculation of the cost of production. The appreciation is allocated cost. It is to be calculated and charged correctly against the revenue of the account. It must be correctly included with the cost of production. Next, correct calculation of profit. Okay, we will do it as per our provision of replacement of cost. First of all, we will discuss provision of replacement of cost. We have purchased the asset. For any reason it becomes obsolete, we have to purchase new assets. So sometimes it is not possible to just purchase asset. We don't have money or any other reason. So by the meaning of appreciation, we kept aside some money that can be used to purchase a machine, whatever we want to purchase. It is non-cash expense, but net profit is calculated. Okay. It is, we have already discussed this is non-cash expense. There is no cash outflow, but net profit is calculated after charging. Net profit in net we will charge it as a loss. So annual depreciation, cash reserve, saved, accumulated to provide replacement cost at the end of useful life. By year, every year, we write off some amount by the name of depreciation. At the end of suppose 8 years, we got some accumulated amount. It will help us to purchase a new asset when at the time when we have to replace the asset. So we can provision of replacement cost, correct disclosure of fixed asset at reasonable value, correct disclosure, correct this. So that we can estimate the its true value, that is fair value. The after charging, if we don't charge depreciation, so after 10 years when it get depreciated, we couldn't get the actual amount that we have for the assets. So correct disclosure. Purpose, correct calculation of cost of production. Depreciation is an allocated cost of fixed asset. is to be calculated and charged directly against the revenue of the accounting period must be included in the cost. Okay. Correct calculation of cost of okay. It will shown as an expense in income statement. So it will affect the cost of production. We will accurately get the cost of production after deducting a depreciation as an expense. But it is your profit that we will get after the depreciation. Now, next is maintenance of capital and compliance with technical and legal requirement. Depreciation has to be charged to comply with relevant provision. Okay, whenever we charge depreciation, it gives us some tax benefit as we will comply with it. Okay, then we will comply with we will comply the we will charge the depreciation. It and then that means we are complying with some act, so it will give us some tax benefit also because it will reduce our income. So we will obviously get a tax benefit. So this is maintenance of capital. Now measurement of depreciation. So measurement of depreciation is quite difficult to calculate exact measurement of depreciation is quite difficult to calculate exact amount of depreciation. This, okay, why? Because it depends on number of factors. Measurement of depreciation, first of all, can be done by so many methods. Straight line, WDV, it's depend on the circumstances or need. Depend on our needs. Okay, then we charge depreciation. Actual cost. So first of all, for measuring depreciation, we must have to know the actual cost of assets. If we have made any addition to it, so we have to add it to the cost of depreciation. Now, estimated life of assets we have already discussed. That is the time over which assets is expected to be used. Scrap, breakage, or residual deals means the asset that we will get after selling it. At the end of the residual period, the book value that we get. That is scrap value. Now, obsolescence. Obsolescence, the chance of the fixed asset going out of fashion. We have already done obsolescence. Now, renewal and repairment of cost. Oh, all these costs that is we have to done for whenever we purchase a machinery or plant, we have to make we have to make some addition to it. That's why. So this is the renewals, repairment, or it may be so we have to do. Measurement is depends on so many factors. First is actual cost, its useful life, addition we have made in the assets, its repair, or so many things. When asset gets obsolescence, we have to sometimes purchase a new machine. So all these factors are applicable for measuring depreciation. Wait. We have three methods of depreciation. First is sinking fund, second is annuity and insurance policy method. Wait, there is some issue. Please wait. Am I visible? Is my screen visible? Okay. Now, method of charging depreciation. We have three methods: sinking fund, annuity, and insurance policy method.
Hello, ma'am. Hello. Yes, ma'am. Okay. Yes, yes. Please continue. No problem, ma'am.
Yes, let's join now. Am I audible, sir?
Yes, ma'am. Yes, ma'am. Please share your PPT, ma'am.
Sorry.
Share your PPT.
Sorry, everyone. We got a little bit late due to some network connectivity issue.
Please
We will
continue. No
start with
problem,
our
ma'am.
first illustration. Let's continue. Yes. So we will start with our first illustration. We have given cost of machine. That is 90,000. We will do it for 2 years. Okay. For the 2 years, you will calculate it yourself. Okay. We have given cost of machine 90,000 and expense. Please solve it by with me. So it will help you. 90,000 is cost of machine. We will add expense involved. That is 1 lakh. Okay. From 1 lakh, we will subtract its residual value. So we will get cost of machine after the decreasing the residual value, we will get rupees 80,000 divided by 8. So 10,000. 10,000 is the amount. Now next for the second year, it's 24,000. And 4,000, we will add 7,000. That expense that we have incurred.
Hello, ma'am.
That we have
Ma'am,
incurred. Yes, sir.
PPT not visible, ma'am. PPT not visible.
Sir, sorry, I have not made PPT. Sir, I have not made the PPT for such illustrations.
Okay, okay, okay. Okay, okay, ma'am.
We will, sir, in the next class, I will make the PPT for all the
Okay, okay, okay.
illustrations.
Okay, ma'am. No issue, ma'am. Okay, please.
So 24,000 plus 7,000 is 31,000. There is some problem in this question. So please do it yourself. There are some problem in the solution. 24,000, we will add rupees 7,000 to it. So we will get rupees 31,000 minus 1,000 is 30,000 minus divided by 6. So we will get the depreciable amount. This is the first illustration. Guys, in the next class, I will prepare a PPT for all the illustrations. So it will help us to solve the question. So sorry for that. Now next, proceed to our next key terms. Illustration we will solve in the next class with a PPT. Sorry for that. Wait a little. We'll scroll the picture. Wait. Now let's proceed to the sinking fund method. Thinking fund method is created with the specific purpose. There may be a purpose that we have to replace the assets so that we will make a fund asset. That is sinking fund method. So to replace the asset of depreciation, to renew a lease. What is the lease? It is rental purpose. It is useful rental purpose. Whenever we have to replace a asset, wasting asset, so we need to purchase a new asset, so we need to keep aside some funds. So sinking fund method is used for the sinking fund. To renew a lease, lease that got expired, to renew it, we need some money. For that, we get some fund aside that is used for sinking fund method. To repay a long-term liability, debenture, long-term lease for all such purpose, debentures, debenture is a liability for paying them, we need some amount. So all such purpose, we use sinking fund method. So sinking fund is created to provide for replacement of wasting assets. We have to keep the asset at this original value, that is fair value in the book of account. We have to keep it in its real value. Wait, sorry, there is some issue. Give me a minute. Huh? What I mean.
सर अच्छा एक्चुअली सर मैंने अपना बीच बीच में वीडियो थोड़ा ऑफ करा था, आप वो नो मैम का मैसेज आ रहा था सर, वही मैं पूछ रही थी। कैमरा ऑन करना है मुझे। हेलो। ठीक है। कैमरा कैमरा ऑन करके मैं स्टार्ट कर रही हूँ, ठीक है सर। ठीक, ओके, थैंक यू। कैमरा स्टार्ट। फीचर्स लगा दो इसके साथ। Now we will discuss sinking fund method. Sinking fund method is used for replace a asset. Whenever we purchase a asset after a long time or whenever we use it, we have to replace it. For this, we need some cash. How can sometimes we have a situation we don't have cash for such purpose. So we keep some fund aside for the by the way of sinking fund. So we utilize this fund for purchasing the machine when we replace the assets. Okay. Now, redeem a long-term liability debentures. What is debentures? They are long-term liability. After a specific time period given to us, we have to repay them. For this, we need amount, so we keep some fund aside for this. This is sinking fund. We use it, utilize it for the repayment of debenture. Now, replace of assets of depreciable nature. Replace an assets of depreciable nature. Obviously, fixed asset that is we have depreciate after its time period is completed, we have to replace it. Something is given on rent when it's got period got expired for renewing it, we have to be money. For the same, we use sinking fund method. The fund that we have kept aside, we use it for replacing it. When a sinking fund is created to provide for replacement. In sinking fund method, there is an interest earning. When the amount that we invested, we earn some interest. That is interest income. So this interest is generally compounded annually and can be calculated using the standard compound interest method. Okay, the sinking fund that we invest in the business. By the way, we earn some interest. Okay, now object. Its object. What will be the objects? The main goal of the sinking fund method is accumulate the enough fund. We should have enough fund for which purpose include enough fund including interest income also to cover the cost of replacing the assets. Whenever we purchase the assets or replace the asset, we should have complete amounts in our hand to purchase a new machine. So this is the basic concept. By the way of sinking fund method, the amount we invest in the business, we need sufficient amount. So this amount also include interest. We should have sufficient money at the time of purchasing new asset by the way of replacement of one previous machine. That is. Now, how we calculate the sinking fund method? It's annual deposit into the sinking fund. C means cost of assets. Sorry guys, tomorrow I will show you all these formula by PPT. It will clear it. Okay. Acha, first now we will discuss book value of assets. In this method, book value will keep in the book of account at its original cost, not depreciated cost. Original, for example, we have purchased machine for 80,000, so we will keep it at rupees 80,000 by the way of balance, opening balance that is. Every year, what will be to the amount of depreciation that we will calculate it? It is charged to P&L account as the expense and credit to the depreciation fund or sinking fund accounts at the same time. How to calculate the depreciation using sinking fund, determine the asset value. What we have to do? First of all, we have to determine the actual cost of assets. The asset that the actual cost of the assets that will eventually need to be replaced. That asset we have to replace. We should ascertain its actual cost, determine its useful life in years, how much time it is expected to be used, second method. And third is estimate the interest rate. Estimate the interest sinking fund. Okay, the fund that we have invested in the business, by which rate we will earn the interest. So there are calculate the then we will calculate annual deposit. So we have three key terms for sinking and method. First, determine the asset cost, actual cost, when we replace the assets. Second, its useful life for the time period for which the replaced asset is expected to be used. And third is interest rate, the money that we have invested in the business. So the interest rate, the interest income we are supposed to earn by the way of sinking fund method. Every year, what we have to do, deposit the calculate amount into the sinking fund amount. The money that the amount that we have calculated, we have to transfer it into the sinking fund account. Sinking fund account. Now, let's take a single example. Tomorrow, I will show you the PPT. Suppose a company has an assets of rupees 10,000 and expected is life 5 years. Okay, I am repeating it again, so it will clear. We have a company purchase a machine for rupees 10,000 and expected life is 5 years. The company expect the sinking fund to earn an annual interest by 5%. So there are three key terms. First is expected useful life. Its cost 10,000. Expected life 5 year and interest rate is also 5%. So now we will calculate the depreciation. We have in this question, we have given the annuity value. Okay. Now 10,000 divided by, wait, we will calculate the interest income. That is 10,000 into 5%. It will be rupees 500. And 500 will be divided by the annuity value. Okay. It will be the depreciable amount. In the sinking fund method, depreciation is calculated by annuity value. First, thank you. Now, advantage. We will take a look. Advantage of the sinking fund method. Prevent financial burden. Okay, if we don't have any financial burden, if we have a burden, if we have certain funds for purchasing the assets, so we didn't arrange to something urgently, can purchase it at the fund we have kept aside. Okay. Now interest earning, the money that kept aside by the way of fund, we will invest. So we will annual income earning, that is interest income. We will also gain it. It will help us with a better planning. Like better planning means that you don't need to think about whenever you purchase assets. You don't need to think. It will not let you over pressurize that you have to purchase. How will you arrange the money? You don't have to borrow. You have the money by the way of sinking fund. You just can invest it and purchase the new machine. But still, there are some advantages of the sinking fund method. It is little bit complex as compared to the straight line WDV. Why this complex? Well, we need to the asset that we have to replace. We must have to know about its actual cost. We have to calculate the interest rate. So all such things are little bit compared as compared to a straight line or sinking fund method. Now, external fund management, that is what we say, managing the sinking fund may require additional administrative efforts. Okay, we need extra planning, extra administrative work. It will also require some cost. So we can't say it has advantage, but it has some little bit disadvantage also. So, but application of sinking fund method depend on the situation when we have to apply it. All the method SLM, whether it is SLM, WBPC, it's depend on the necessity of organization or entrepreneur where we are doing the business. So it is just a unique way of handling the depreciation by setting aside some money over the time to replace. But over a time, by the time we are expected to use the asset, and at the end of its useful life. So the method is useful for the business that needs to plan for the large costly replacement. Means we have to put large costly replacement means we have to buy a big machine having cost maybe 50 lakhs 60 lakhs. We can't arrange at a once. We need a long-term planning for the sales. So we will. So for such kind of investment, we use sinking fund method. If you have any query, if you have any query for this, you can ask me. Please leave a comment or you can ask any question. Okay, now let's proceed to the next method. Let's take a look how to this formula. It's D. D is the depreciation. How to calculate depreciation? CI means cost of the asset. Bracket 1. Its I means rate of interest. 1 plus rate of interest. It means its rate of interest is 5%. We can say 1.05. 1 plus 0.05. And its number of year we are expected to use up assets. Wait, what's wrong? It's called wait. Sorry, guys. Wait a little bit on them. So CI is D is depreciable amount. I interest of rate, it will add it to 1. If it is 1.5%, that is 0.5, it will be 1.05 and number of years that's one. So this is the sinking fund method to calculate depreciation. Now we will take a look at the journal entries. Tomorrow we will do some illustration based on it. It will be more clear by the illustration. Let's have a look towards the journal entries. Wait. For the annual depreciation. Engine risk. Page missing. Wait. It's illustration number 3. Illustration 4. Illustration 5. Wait. So at the end of the first year for annual depreciation, we will transfer the depreciation to the P&L account by the way of annual contribution, or you can say it will be expense. Now investment that we have invested, the fund we have invested or cost of the asset. Journal entry will be in sinking fund investment to bank account. First, the money that we have invested in it is transferred to the sinking fund investment account. So it will be debited and credited by bank account. Some entries will be remain keeps it will be remain same in each and every year. Let's take second year, it will be same profit and loss to the depreciation to the sinking fund account. Now we will earn the interest that we have earned. It will be transferred to the bank account. So bank account to interest on investment account. Interest on investment then transfer to the sinking fund because we are getting the such interest from the sinking fund. So bank account debit to interest. Now interest on investment to sinking fund and from the sinking fund to the bank account. It is annual contribution plus interest. The money that we have interested over, it's the interest that we have found. Now, when the working life asset and then we are supposed to replace it, then there will be some variation in the entry. First, bank account debit to sinking fund investment, the amount by which we have sold the machine. Next, sinking fund investment to sinking fund account. If it is profit on the seat, then we will do sinking fund investment to sinking. Other if it will be loss, entry will be reversed. That is sinking fund account to sinking fund investment account. Now, so here is the entry for given for the loss on sale or profit on sale. Now, investment is made in the last year as investment are to be sold out. Okay. The investment we have to make in the last year when we sold it out. Now, sinking fund account may be called depreciation fund account also. Okay. The entry that we have written it interest on investment, we can transfer it to the depreciation fund account or sinking fund account. It will be remain the same. It will shown on the liability side of balance sheet. Yes, it is expense, so it is shown in the liability side of the expense. There are some illustrations based on the this concept. Sinking fund investment account. We have given the illustration number 5. Uh, Tomorrow we will solve it by the PPT. So friends, today we have covered by the till the sinking fund method. Wait a little bit. Yeah. Uh, Chemistry not. Screen not.
Ma'am, class is over.
Yes, ma'am. I want to ask. Am I audible?
Yes, ma'am. You are audible.
Okay. Okay. Let's take a glance what we have done in today class. From the beginning, we will start. Just a look what we have done. Tomorrow we will we will done some PPT that will help you to more clear the all the illustration. I will prepare some PPT for all the illustration and other concept that we have learned and try to cover all the all the other remaining topic in the next class. first we have done today in today's class is depreciation. Depreciation we have done, that is gradual decrease in the value of assets. Now we have also, after that we have done, learned some key terms, that is amortization, obsolescence, depletion, all this. Then we have EBIT. Let me start first. Start secret. So let's leave the class for today. If I have done any mistake or you have any query, you are free to ask. Tomorrow I will share some PPT. So class is over for today. We will start by the same time tomorrow. Thank you. Thank you, everyone. Thank you.
It
Thank
was
you,
great.
ma'am. Thank you so much.